Yeah, and you don't have to agree with us. Maybe you could correct us, or you think that we're way off on a topic. Be more than happy to hear what you have to say.
Welcome to Hedge Heads, where we discuss the commodity markets, news, and anything related to trading. Remember, risk of loss in trading commodity interest can be substantial. These are opinions only, not trading advice. There are no crystal balls. We don't know where the market's going, but we always have some ideas. I'm Ryan Tunkseth. He's John Prishman. Well, John, the drought is over. It's pouring rain here today. I'm pretty sure we're going into planting delays, probably. Is that what we're looking at here? I mean, it's just pouring rain, so it can't be drought. We must have planting delays.
Talk about a curveball. It's raining in the springtime. I meant, who could have predicted this?
I'm shocked.
Those February, March weather guys saying that we're in a drought I'm shocked that we're here, that it's raining in the springtime. I meant, it's not what you'd expect to see, or it's exactly what you would expect to see.
It's kind of like the markets, right? I mean...
it's the struggle last year was the snow melting up north here, where I do remember very close to fishing opener, which is going to be right around May 12th, 13th, 14th, depending on the date here in Minnesota. I remember that you could still see snowbanks near fields here in west central Minnesota, and the ground had thawed out, but I wouldn't say that it was thawed out and ready to plant everywhere at all. Where this ground, it's thawed out in December, maybe froze a little bit in January, February, and then by the end of February it was again thawed out. So that isn't really the issue. I think, you look at the percent plant at, what were we, 6 or 7%? It looks slower than what you might expect in a spring like this. But I think it's the calendar date that bothers a lot of guys. It's just like, if you got this wide open window, why risk it early? I mean, especially in the region that we're in. And then even west of here, it can be very chilly in May, and when costs are high and margins are thin, the last thing you want to be doing is making mistakes when it looks like you have a wide open window coming up. And I think that's probably what you're seeing early on. I mean, people want to break records, but at the same time, it's not worth it to replant and be silly about it. So you'll probably see it pick up pretty good. There's guys definitely moving around here, which is going to mean there's guys moving around everywhere.
I did make a trip up through North Dakota over the weekend, and there was a lot of field work going on, not a lot of planters rolling yet. But like you said, that probably has to do with the dates. I did see a few guys out planting, but lots of fertilizing, lots of digging, disking, turning fields over. So
and they're probably really happy. It's been a struggle in one region or another for years now, and generally it's been a very poor April that's led into very late plantings. But with today's technology, it's not been any problems at all to get this stuff in. You have to go back to 2019 to see the major problems, and it just kept raining and raining and raining. You will see, this is a volatile time of year, and I think we've talked about it before. Things can change quick. Plantings might fall behind. Right now they're on pace, and we'll see what happens. Calving season, for the cattle guys, I think is a lot better than what it's been in the past. It might start getting a little muddy now. This has been pretty widespread rain, but really not enough to make a mess anywhere. Maybe the Ohio Valley.
I'd say much needed rain also. From a market perspective, if we're looking at specifically grain markets, what do these, really excellent planting conditions generally mean for the market?
The dryness is seen as a negative first, meaning they can plant fast, and then the price usually, without a lot of news, struggles. So this is kind of a weird pattern where, it's just not far enough along to really make any sort of judgment. The first thing they would say is with the low corn planting number that we saw in March, that corn would be more sensitive than beans, and you're definitely seeing that already. The beans just look terrible, and what, down another 13 today. It just doesn't have any zip. I don't think it's probably trading the weather, other than when you look at last year and what happened last year, it kind of quit raining in May and June for almost everybody. And this year, it doesn't look like, the same dryness that we saw. But I'm going to go grab a drink of water. I got a dry throat here real quick.
So you're able to wet that whistle then?
Yeah, rookie mistake, not having some sort of liquid nearby. That just shouldn't happen in a podcast.
I mean, we got to start recording down at the brewery, I think. That way you don't need to worry about it.
Yeah, there's going to be an extra minute of editing for you in there, so you're going to be earning your money this time.
Sounds good. So you were talking about the conditions. Now we're going to have to edit this part out too. But
yeah, generally you'll see the once the planters roll. I mean, generally you'll see prices weaken up. There just isn't a lot to talk about. One would argue that the price is already weak, that we need to go up because they're already weak. We just need to see some news, and there's definitely been plenty of world news lately that is making a lot of the markets volatile. We haven't seen any of this spill over to the grains. But, that's what guys are talking about. They just the volatility that's entered these markets and what that could mean for these markets, but we haven't seen any of that yet.
Well, when we talk about these prices, you were mentioning beans, just not anything positive at the moment in regards to beans. What do you tell guys who need to market their beans or need to have some sort of protection or something here? I know we've talked about it a lot that guys like to think in absolutes, like I can't make it work at these, $11.50 or whatever beans are at right now.
Yeah, a lot of mistakes are made in what you said. It's either I got to get this price or I do nothing, and that's where you'd asked about this in a different podcast. What is one of the bigger mistakes they make in hedging? That's for sure it. The path of least resistance, the easiest path is sell or don't sell, and that's where you get a lot of guys clumped up. So if they don't like this price, they do nothing. And they don't protect anything. They do nothing waiting for a better price. And I think that when you're a better hedger, that you're looking at every available option to you. Is there a way that you can put a floor in temporarily or longer term, still have your upside open, and then enter a gray area where, hey, I'm protected if it doesn't go well, but I have my upside open. And it's not this absolute that a lot of guys market in. Without a doubt, is the biggest mistake. And again, that'll work for some farms. Maybe they're just great cash marketers. But for the majority of people, it takes out a lot of what they could do for hedging just by thinking, when I sell it, that's the price I'm going to get. And it's just a major mistake guys make in thinking either I own it or I don't own it. And I don't know what percentage of a producer that falls upon, but I think it's a large swath. They just think in very simple terms. I got to pick up the phone and either I sell it or I don't. And it's just not the case when you get to be more efficient at hedging. Again, you'll use different tools. For instance, what I'm trying to do here is get the floor bought and then have the upside open. And there's various ways to do that. And once you start opening those doors, then there's a million combinations to talk about. And of course, it would depend on the producer and the farm. One guy's going to do very different things, but the same sort of concepts. Again, I think before you know any of the weather, it's really good to keep the upside open this time of year. You got to recognize your time frames too. Is it important in July with a good rain? No, it's not near as important in what you saw last year. Once the rain starts coming midsummer, keeping the upside open is not near as important as it was maybe in the springtime. So that's one of the biggest mistakes, and guys can work on. And again, we've talked about it a couple times. Hedging's got a bad rap somehow, and it's really just a choice. You're simply putting the risk on somebody else for a certain dollar amount or a certain trade in value. You're just not taking the risk yourself. And that's, again, why maybe guys feel pressure all the time. They're taking 100% of the risk of the farm. They're never putting it on a hedge and just being able to sleep better at night. And whether it's, bad experiences in the past, whether they don't know how to do it, it's hard to say. But for not really a lot of money, oftentimes when you consider how much money is at risk, I would be talking puts, how easy it is to protect. Or, you also think in absolutes, like I harvested it, it's got to go to the elevator to store it, and I got to store it. But there's a million shades of gray there too. You can own a call. You do not have to store it. And I think that's what we're going to see people get away from is when it's higher, it's a lot easier to market. You got better prices, everybody's profitable. When it gets lower, that's where the decisions that you make will impact what you're going to make on the farm for the next couple of years. And it's very sensitive to time frames, very sensitive to weather events. And people are open to a lot more ideas. And those are the kind of the cycle. So we're entering that bear cycle again. Of course, the bulls are going to fight it and say the numbers aren't right. And you hear the same sorts of things every year. If the numbers aren't right, it'll definitely show up in the market eventually. And we did see that in 2020. And ironically, it's the wet and cool that usually makes the numbers really misread and not correct, because low test weights and stuff like that, we seem to burn through the supplies a lot faster, where the warmer and drier tends to be higher yields and maybe better test weights, better everything, and it carries through longer and it's harder to use that supply up. So it's everybody's under the impression it's the hot, dry years that you get the better prices, and that's not true at all. It's generally the wet, cool years, and the kind of the curse of it, it's usually a year and a half after that happens, after everybody's kind of long given up on the market. And last year was hot and dry. It was a very short-lived rally. Again, you were talking about what can you expect this time of year. This is a time of year where you find people cherry-picking a lot of data. You're going to find your guys saying it always gets hot and dry. You're going to find your guys saying there's always a rally. There's always this, or the funds haven't been this short and they cover X percentage. You'll find anything you want to find this time of year. And the truth is, it's very much a flip of the coin depending on the weather. There's been years where it hasn't rallied the entire summer and just downtrended. I believe 13-14 was that year. Other years where it's trended down all spring and then it's exploded midsummer, and that would be the drought of 2012. It was a very, very bad market until it took off, and that would have been in the third week in June. And I know that very well because I own July calls, and I probably told the story 3 times already. So I'll never forget that. Those expired worthless, and then the rest is history. It did go up very sharply. So there's all kinds of shades of gray this time of year. You just have to take it day by day, and nobody actually knows what's going to happen with the weather. And I have noticed a new trend with the weather guys. I don't know if you've noticed it, but it seems like everybody's got a weather guy now telling them something.
There's definitely more and more weather news and more weather info that gets thrown around out there. And I mean, I'll say something, especially like thinking of 2012, and like that was drought for a long time. There was news for a long time. It was dry for a long time before the market changed. Those are some things that we see over and over, is that the market changes when it changes, and we don't know when that's going to be. And if you don't have some sort of hedge in place, or in that case, in 2012, having a hedge that allows upside in place, we don't know the timing. 90% of trading, to me, is timing. The direction often is the easiest part to look at. When it goes that direction is almost always the question.
Yeah, and just little decisions like buying a July call instead of even a September call, which actually would have got a guy out at the high that year had you stayed in. Just these little differences, can make a huge impact. And recognizing what's a better option at what time of year. There's going to be guys that favor shorter term options. There's going to be guys that favor, something in the middle or a lot of different combinations. I personally like to buy a lot of time. It gives you a lot of time to be right in that window, and it gives you a lot of time to be protected. But let's say you buy a December put, in corn. It's not often that you'll find your low in December. It's that's another, thing you were like, I got this protection all the way through. Often you'll find the summer low in August or September, and then bottoming and coming up by October. And, not always, of course, there's always exceptions to the rule. But but it gives you that time frame. Last year, it was a very odd year for corn puts, where March was the corn put to have. You won't see that too often, where it downtrends in the summer and then goes sideways right from where it began in spring, and then kind of stalls out there and just hangs out there for a while, and then downtrends in the spring very sharply. That's a very unusual pattern, and that's really what's throwing everybody's marking off this year, I think, more than anything else, is that you just don't see this very often. So, the thought process is, well, if it's sold off since November, surely it has to come up at one point. And I think that this year is going to be very weather dependent. I mean, it would be nice to see some surprise demand out of China or something different. But, that the days are shrinking now to where, you can expect a rally. But it is an intense window, and that's what I love about this time of year, is it does tend to pack a lot of action in a very short period of time. And like you started with, timing in this window is everything. The 3 or 4 guys that called me, I think, on the 2 days it was running up to 640 last year in corn, they had a very different experience than the guys that just didn't get a chance to call because it was such a short rally. And that has a little to do with luck. That's not all skill. Right day at the right place, or it just can be that way. Last year it was that way. The spike was so short lived. Just a few days made all the difference in the world.
Speaking on that side, I think of some analysts that I've recently read some of their stuff, and from two sides. One guy was analyzing the soybean spreads for basically from this year through 26, and talking about how with full carry we're bullish. There's no reason to sell, basically, and we discussed some of that. But when you look at some of that analysis, when you look at what's out there, what do you see? What do you recommend, and how people read that, or what's being shared that way?
Yeah, I mean, the spreads, we'll talk about the spreads at this time of year because I think it's important. You look at May, July, and you look at the previous few years, and we've been in very inverted markets. I think the low for May, July corn last year was -2, -3 maybe, and all worked its way up to plus 35. For at least 3 years in a row. 1 year, I think there was plus 60, So you're used to these inversions this time of year for the last few years, but we haven't seen that this year. It's normal that you would see that in a bull market, but the bear has shown up this year, and now we're at, if I'm not mistaken, some of the widest carries we've been at this time of year in a very, very, very long time. I think you have to go back to the trade war. And you can cherry pick all you want, but that's a hard one to hide. I mean, it basically says, in the commercial channels at the delivery points, please don't bring beans or corn in. We have plenty. So what you get is carry in the market discourages people to bring more in. That's not what you want to see at this time of year. Now, you'll find guys arguing it's all manipulated, the funds are short, and this and that. But I find that the carry is a pretty good read on the market, and it's super troubling that we are this wide this time of year, because theoretically this is going to be as tight as we're going to be for the rest of the year. Of course, we don't know that yet with the summer weather, but it's unnerving to see where we are with those spreads right now. And like you say, the information's really changed over the last few years, and I can tell guys are getting more information now. Is it better? I've not seen evidence of that, but clearly people are reading more. And I wonder if it isn't just you keep reading until you find stuff you want to read, that agrees with your opinion, or analysis paralysis, where you just see so much that you're like, well, I'll just see what happens. I don't understand exactly what's going on. This guy is wildly bullish. This guy is wildly bearish. How can everybody be this way? I tend to fall back to the USDA's numbers when it gets to be like this, because honestly, that's what the market's going to trade 9 times out of 10. So it gets, I've seen a lot more information being exchanged online on phones in a lot faster fashion. I've yet to see that help people, and it's really noticeable. I mean, it's over the last 2 years, it's really changed really rapidly. And I'll get all kinds of crazy stuff when people call, like, have you heard this? And it's like, no, that seems like that's completely made up. And then that's where it'll disappear in a day or two. And it just, this information is being exchanged very quickly. But that doesn't necessarily mean it's been better. And I think that's where you're seeing this disconnect, this kind of a lot of disgruntled people because their guys tell them this or they read this and they're just seeing the opposite in the market. So kind of a new thing. I really don't know what to think of it other than I haven't really seen this before. And they have a lot better idea before they call me of what they think is out there. But again, I tend to fall back to the USDA's numbers because that's what people trade.
I would say on that analysis paralysis side, almost the opposite of the paralysis is I've seen guys who spend a lot of time researching. They know what they want to do. They have an idea of where they want to be positioned. They may even put those positions on, and then they'll read one voice that says, a theory opposite of theirs, and they're ready to take every position off because this one person said something opposite of what they were thinking.
Oh, I've loved that one. That one, yeah, I've turned a boat around from fishing one time to take off a very large position on one forecast in the middle of the summer. It was actually early summer where one outfit was forecasting something nobody else was forecasting, and it looked scary at the time. So I've definitely seen that. And, so what's the balance? Not listen to anybody, listen to only these people. I mean, what you need to find is better information coming to you that matches the price action. And then I think you're going to find a guy that's more flexible with, maybe reading the tea leaves a little bit better than the next guy. You want to stay away from, just a bias. Like, trade it, don't marry it. You hear a million different things about the market, and they're all true. Trend is your friend is another, just recognizing what kind of market you're in. The funds are heavily short, and then you're getting guys saying, hey, these guys are wrong, they're stupid. And but if the funds are short and the trend's short, that is the path of least resistance. And, that's where a guy should be till he shouldn't be. Easier said than done. I mean, these are all trading sayings and little, things that make it seem like it's really easy. Just look at the chart and you got to figure it out. But, you get a chart even and you get 4 professional chart technicians looking at it, you're probably going to get 4 different answers. It's very subjective. And that's, you just try to read what you can in the markets and try to make better decisions. And like I said, I like strategies that you don't have to be right on day one, a lot more forgiving. I don't like margin calls, but that just suits my style where the next guy might be completely different. So you just try to find that balance and you try to find your sources of good information that you trust. And then, like I say, the biggest pitfall is just continue to read until you find what you want to read and to confirm your bias. And usually that's not helpful.
People do that in way more than just the markets.
They do. Yeah. It's just human nature. It's very common, a thing to do. It's almost a defense mechanism. I'm not wrong. They're wrong. It's trading and hedging is very humbling. I mean, you got to say, I put a trade on, and 2 minutes later, I hated the thing and I can't believe that I did it. It's just the nature of the way it goes. You just try to keep an open mind. It's a very emotional thing. And I feel like the emotions are running particularly high right now. And I think it has a lot to do with the expenses coming up very fast for everybody. And then you're seeing lower grain prices or even lower cattle prices when these guys are buying, it's very expensive at the sale barn. They get one story and it takes all the profits and then some away. So it feels like a very frothy, emotional time period right now, or at least that's what I'm experiencing, where people are maybe a little more sensitive to a lower price.
I would agree 100% on that. You've mentioned a couple times now the funds being short, and we do see that the funds are record short every time we get another report, record short, and well, at some point they have to cover. Certainly, if there was ever news that would create a rally, there could be opportunity there, right? But yeah,
a lot of different animals there. I mean, look at wheat. Wheat's had a heavy short for a very long time, and you'll get rounds of short covering, so you haven't got much of a rally in wheat for long, and you hear, oh, they have to, and we'll just wait, and then when they cover, just think of it for fuel for the fire. If there's actual reason why they would want to cover, and it can be very powerful. So that's why I think that people are hopeful that you have higher prices coming, because if these guys are on the wrong side betting on the weather way before it happens, then boy, when the bad weather comes, it's going to be an explosion of a rally, and it gives a guy hope. And they're not wrong. I mean, it is cocked and loaded to go to the other side, but the catalyst to get to the other side is just simply not there. I mean, the demand is no better than the U.S. is saying, and less in soybeans than they're saying. Corn's hitting the numbers, but it's not going to change the numbers. Last Thursday we had the report, and they found more corn, they found more beans, and that's kind of been the theme. So you need that catalyst. You don't generally just find a random huge short covering, but it's a possibility. And they might decide they're too short and they want to get less short going into the growing season. But you just remember in 2012, they were very comfortable with being short and adding all the way into the very teeth of the drought. And I think in my opinion, it was very evident that the crop was doing very poorly. And then that forecast came out going in the 4th of July, and it was off to the races. Last year, they tried to spin it into that, and it just wasn't the same sort of weather pattern. It was very warm and dry in 2012. Then it got really hot midsummer.
I would say, I don't remember the saying around it, but you can certainly, I would run out of money before I'd end up not being wrong. What's the saying on that one? I know there's one then. But you could, if you got deep pockets, you can hold it so long as you like. But,
yeah, the markets can remain irrational a lot longer than you can remain solvent. I mean, there's we'll do a couple sayings a podcast, because there's an endless amount, and honestly, we laugh at them, but the sayings are there for a reason. I mean, it's tried and true stuff, and it doesn't really, through time, it hasn't changed much. One of my favorites is trade wheat, sleep in the street. I think that's a great one. Wheat is a very difficult market. A new one on Twitter about wheat too, sell wheat, live in a mansion. I like that one. I don't know who coined that, but you see that mentioned a lot. But market sayings are there for a reason. I mean, it's a tricky place, but that's why we're doing this, to kind of, through our experiences, kind of share what we've seen in some of the pitfalls, some of the good stuff. It's not all bad by any stretch. And, you're constantly look to improve, and that would be the goal in better marketing, better hedging.
So you mentioned earlier in the podcast that, there are some world events going on, Israel and Iran, and the Ukraine war is still going on. How can what's happening there affect the grain markets? Anything to watch for? Obviously, we don't know what will happen there, but by the time people listen to this, it could be way different. Yeah,
I think Sunday night was a big surprise. I was there at 5 o'clock waiting for the markets to open and looking for oil to be up sharply, and it wasn't. I think it opened down 12 cents from Friday. Friday was up quite sharply, if I'm not mistaken. Very fluid situation. What I think that the market would trade, and I have no idea because, we don't go through this very often, is that oil would probably be sensitive to the upside, but so far we haven't seen that, and that would in turn drive grains higher. But then if it were to escalate and really get bad, I would guess that lines are going to be drawn that you'd have to just start deciding who's siding with who. And if you start getting China with Iran, even if they're not directly involved, but, support that way, and then Russia, and then you throw in India, is a huge question mark, and even Brazil with their new leadership. Which way would everybody be leaning? It doesn't look, in my opinion, super good for U.S. grains, because where the people are buying the grains would look like they might not be, they might be supporting Iran's position more than Israel's, but it's a very fluid, and no one really knows. I just don't see how that disruptive of events would make it really bullish. Would they buy grains, because they thought the shipping lanes wouldn't be open? It's really hard to know what would happen. But I have a hard time seeing a lot of positives other than grains following oil initially, right off the bat. And then beyond that, I don't know that anybody knows.
I think it's definitely a different situation than the Ukrainian war, where you were specifically talking about world exports.
High production area and not knowing what's coming. Is it going to be none? Is it going to be, normal? That's going to have a lot more speculation to the upside, where Israel obviously doesn't raise a lot of, food that's exported. Iran also is not a big part of that, but then the oil is, and the spillover and the support from various countries, or, hard lines being drawn, and sanctions going against countries they'd retaliate and not importing grains from the U.S. Like, it's really hard to know where any of the chips would fall and how fast it could spin out of control, or there might not be any retaliation, and that's what makes a market. I mean, no one knows, and you have to take it day by day.
Let's hope we don't have to find out.
Yeah, no, it's been a calm couple days, and the markets were surprisingly quiet on Sunday, like they knew it was going to be calm somehow, and that's basically that's where we're at right now.
Excellent. You had mentioned earlier too a little bit about the cash markets, and I wanted to get back to those. So we talked briefly about basis and hedging and watching the cash markets, but I hear quite often like, well, I want to hedge, but the cash markets, or I'm looking at this. What do you look at cash market wise? Do you tie that into your hedges? Obviously, they affect what you're hedging, but they're more localized. Anything you want to chat about on that side?
Yeah, well, the guys that need the grain aren't going to say, hey, we're going to desperately need grain by mid-July. We messed up and we didn't book enough soybeans. Get ready because we're going to bid it. Like you get a lot of cat and mouse. More if that was the case with Crusher, he would more likely act like he had too many beans than not enough. Because there's a lot of money at stake. So a lot of cat and mouse. You try to read the tea leaves with a cash market and basis, but here's the line that you got to be really careful of: your local stuff. Watching that too close compared to what's happened nationally. A good example would be, I think, Northwest Iowa has been very, very drought-stricken for 3 years, and you're going to get a red-hot market, and that's what the basis and the cash market's for. If the grain's needed in that area and there's not very many, make it so that grain comes there, and that, how do you do that? You invert the markets. You offer way more than what the futures offer or the cash markets offer, or you bid the cash market up, and then the grain simply moves there. That's so you don't want to read too much into it on the regional stuff, and then you'll see, a guy will call and say, hey, the basis has really come up here. Do you think that means anything? The local ethanol plants like 25 over. But then in a year like this where everybody's sitting on corn, then it gets to be a game, when's your neighbor going to take that? And you try to get ahead of him before the basis collapse. And that's kind of the market that we're in. You see these flare-ups and they don't really amount to anything, and then people take them and then they miss it. And then they're like, oh, that I guess it wasn't as strong as I thought. Where you go back 2 years ago and it was very national. Like, I would talk to one guy in Illinois, and his ethanol guy was matching what was happening in Fergus Falls here, where they were 35, 40 over and on the phone looking for the stuff. So when it's happened nationally, it's much more important than when you're getting into the regional stuff. The Western Corn Belt was really drought-stricken a couple of years ago, and you just saw red-hot cash bids. And, so that it's a tough to know what's regional and what's going to spill over to national, so it's an art form, but clearly there's a lot of leftover corn here. And that's back to my network. That's where it's nice to talk to people all over the country, because you get a much better feel. And that's where, part of the where I can help a guy is just the guys that I know and getting a read off that, or hopefully. And that's where, you find, if you're hearing it more widespread, that maybe you can get in before a big move. Than where this year, like, you'll see it on Twitter, like, if this is so bearish, why is Iowa plus, so it's not easy to navigate, but the national stuff and the national basis, just in general, is going to be a lot better than to look at your just regional basis and what's going on there.
Obviously, if you have corn you want to sell, watching your local basis is going to be important, and being ready to move it. But
yeah, that's just a whole nother market. That changes. It might not have anything to do with futures, and in decisions in local cash markets is just a whole nother talent level, like gauging what's around your area and what's going to be for sale, what price, and trying to beat that guy. Let them bid it up as much as they can, but then beat everybody to that bid before that gets swept away. So that gets to be a whole different ball game that has nothing really to do with futures, and there can be huge differences in farm income when you try to time that better. Is there a gauge, or is there anything you can subscribe to help with that? That's a lot tougher. I mean, it's human psychology. That's why it's like, when is my neighbor? When is that going to be a good deal for my neighbor? And is he going to get rid of 100,000 bushels and then it's going to knock the basis down 15 cents? That's just knowing your region, I think.
That's why you got to be in the coffee shop every morning.
Yeah. Well, yeah. I mean, how can you be in the markets if you're not in a cafe listening to the hot takes? I mean, of course, that's where you go in the morning, right. And then right to Twitter, and then. If you hit those two things, how are you going to lose?
I think the answers are all right there. You got it. I mean, maybe you head over to the brewery after. But.
Oh, yeah. No, it's known for a lot of smart talk and a lot of smart people at bars, too. Yes. Yeah, I agree.
Anything else you want to add today, John, or should we call it a day and go enjoy this rain?
I'm surprised you haven't brought up my garden in the office.
Oh, my gosh, the office garden. We were going to talk about that. It is blooming.
It is. It's lima beans have taken the lead by a ways, very aggressively. In second place, though, just I'd say for volume is going to be your snap peas, your sugar peas. Impressive. Radishes were quick out the gate. I was gone for a few days, and pretty much everything but peppers have come up. Now, putting this in soil and making it grow, that's where I might have problems. It works really good in the office when it starts in these little kits. I mean, it's impressive, but how not to get the deer to eat it and then remembering to watering it is probably going to be the hardest part I have.
You might need to reach out to your network. They have a lot of experience in growing plants out of the ground.
I might hit the farmer's market and look for some tips. My father was very good at gardening, and I'm going to try to pick up the torch here. I don't know if I have it. I'm gonna starting off good though. You have to be impressed.
It looks good in the office. Someday we'll have to maybe do YouTube for a podcast just so everyone can enjoy our setup. Here we haven't really talked about our highly professional setup of sitting in the big front windows downtown Fergus Falls as people walk by. The mailman just tried to deliver a package and just waved at us because we had the door locked.
Yeah, he rattled on the door. He didn't look super happy that we had it locked and we're sitting right there looking at him.
And it was pouring rain on his head. So, but we do get this beautiful garden in these windows to enjoy. What we do.
At least for a couple more weeks. And, I'm looking for the watermelon to come up. That's been the disappointment. It's just, maybe it's slow.
I want to see, well, you were gone 5 days. I'm not sure I fully watered your garden for you. So you have to deduct something out of my gardening pay.
And I don't know that Minnesota is known for its watermelon growing, but we're going to give it a try.
I would love to have a few in the office. Maybe we can leave those in the office.
That seems like a good idea.
Yeah. All right, John, you want to hand out your number again? And I should mention the email address. If you have questions or topics you want us to address, the email address is hedgeheadspod, hedgeheadspod@gmail.com.
It's easy for you to say it.
No, it's not.
Yeah, and you don't have to agree with us. Maybe you could correct us, or you think that we're way off on a topic. Be more than happy to hear what you have to say. Give us a call, 218-731-1578.
Thanks, John.
No problem. Yeah, the garden definitely will be part of the topic. Clearly, the lima bean is working is beating everything else right now.
It's about a foot taller than everything else.
Radishes were quick out the gate, and they've fallen very far behind everything else. And peas they're dominant.